Welcome back to the Traders Network. I'm Michael Yorba, your host. We're also streaming to you live on yorbamedia.com. Nick Santiago, President and CEO in the Money Stocks. The guy has been threading the needle since, a couple of years, almost a couple of years now, huh, Nick?
I guess it's been a little while now, yeah.
Yeah, you certainly, laid your claim to fame on this show. All right, what do you got for us today? What's first?
Well, we got a few things in store for today. First thing I'd like to talk about is the euro. The euro actually has been coming down, quite significantly, really since the start of the month of February. And I'm looking at the pattern that it's actually making on the daily chart now, and this is setting up potentially to go lower. And a key level would be a break, really, in my opinion, say below the 129.50 area. Would be a failed pattern, and that would send this euro possibly down to around the $1.24 level. So I think traders are going to have to watch this thing pretty closely going forward. But the longer this daily chart just goes sideways along this 130 level, that is setting up for further downside to come. So I think the euro is warning everybody of what potentially could be about to occur in this market. And as we know, when the euro goes down, so do the stock markets.
Okay, all right. Let's go to the stock market then, and then we can cover the dollar in a second because you brought that up.
Yeah, well, the overall right now, I mean, you've had a pretty good little rally in the stock markets. As you know, I had a cycle date going back to around the 19th of February, which really reacted pretty well to the downside. And now we've had 3 consecutive up days in a row. But I would tell traders right now, until that high gets taken out in the S&P 500 from the 19th of February, don't get bullish here at all.
Okay, all right. Are you looking at any cycles coming up in the near future that you thinking price and time may converge?
Well, I have that cycle from the 19th, which is still in play. Theoretically, it hasn't been breached yet until the S&P high gets taken out on a closing basis on the daily chart. That cycle's still in play, and I think we still are looking at downside to come right now.
Okay, yeah, my numbers are telling me something like Wednesday next week that ought to be over, and our previous guest is getting a little bearish. All right, now, what is your thought if we do top out here for any kind of a retracement? What are you looking for on that side?
Well, the first big level that we're going to look at on the S&P 500 is if the market could come down to around that 146 level. I think that's a major test for the market, and we'll have to just see how price reacts around that level and what kind of pattern is formed afterwards. But if we do come down into that area, that's going to be, I think the market's first real support area.
Okay. All right. Are you going to be playing this with individual key stocks or using indexes? Or, how are you going to trade that?
Well, I'm already positioned somewhat. I have an S&P 500 short via the SDS. Traders, that's a 2-time short S&P 500 vehicle. I'm also short the semiconductors index, but I've already taken half the profit off on that trade on the 25th. So I'm just holding a second half position in that right now with a break-even stop. I am looking to add to more shorts, possibly maybe before the close today or tomorrow. And I guess we'll get into a couple of those trades, too, in a few minutes.
Okay. Now, all right. You said 146. You mean 1460 on the S&Ps?
Yes, 1460 on the S&P. Excuse me.
Okay. Yes. That's a profitable trade.
Well, already, we got short in the market, basically right at the dead high on the 19th of February. So, we took profits on the 25th already on everything and booked most of the profits, and then move the stops up to break even. So, we're sitting pretty on a few positions here.
For those who are not looking at the charts while Nick is talking, that is also the exact low day to take a profit on the 25th. Nice.
Well, after a move like that, when you have such a big decline, you generally look for a little bit of a retracement or a bounce. Now the market really is retracing that entire bar, but notice I think this is important for your members. If they could look at a chart of the spiders, they'll get a real good sense of it. But the move on that occurred on the 25th of February occurred with 250 million shares of volume. Now the markets have rebounded up towards that high of that on the S&P, the SPY, towards that high, which was made on the 25th. But look at the volume. It's been declining volume. And today, we're not even trading 100 million shares. So when you go up with declining volume and you sold off with high volume, as an old trader's rule, the volume or the momentum is still on the downside until that level is taken out.
Okay. All right. Now we've got a lot more a lot more other stocks and markets that we want to talk about. Which one next for you?
Well, we could talk about the U.S. dollar index since, that relates to everything right now. When the dollar is stronger, usually the markets are weaker. Sometimes that won't be 100% inverse correlation to the stock markets when the dollar is stronger because of the light volume nature that we have out here. But right now, the dollar is holding up like a rock, and the next level on the dollar is 82.60. So, I wouldn't rule out a surge up into that level. I think that's really where this dollar wants to head to.
Okay. All right. Are you playing this with any particular indexes that you're using or futures, or how are you trading this?
I'm not really playing the dollar so much right now. I'm not in a dollar trade at all. But what I am doing is that I'm in the market trade, and I know as long as the dollar remains strong and the dollar is pushing higher, the markets generally will go lower. So that's just another thesis of mine that tells me these markets are not out of the woods just yet. And, the Bernanke bounce from the 2-day testimony that he had yesterday in Congress probably will be started. I think institutions will start to fade that now.
Okay. All right. Now, U.S. yen, Goldman Sachs, and Morgan Stanley you wanted to get to.
Yeah, I wanted to talk about the Japanese yen, the dollar yen, simply for the fact, if you take a look at the daily chart there, that's telling me that the yen is going to strengthen. And I think traders want to watch the 88.80 level. I think that's where the yen is going down to. So if anybody out there is a swing trader, you can actually short dollar yen here at around this 92.75 level down into the 88.80 level.
Okay, that's a really good trade. All right, I see it bouncing up against some resistance here. Okay, great. All right.
And the stop on that, Michael, just so everybody knows, because it's always important to have a stop. You put a stop right above $95. First close above 95, you stop out.
Let me put a little disclaimer out there. If anybody out there is going to pull off any of these trades, you need to do it in the room with Nick. Don't try this on your, don't try this at home, kids.
Yeah, come on over, take a 7-day free trial. I mean, you get full access to myself, my partners, and we'll go over everything, and we talk about targets, stops, and everything else out there.
Well, that way they get the benefit of when to actually pull the trigger on this thing and
absolutely.
Scratching your head.
To me, Michael, if you're not in the trading room, you're doing yourself a disservice.
Exactly. All right, Goldman Sachs, what's up with this one?
Yeah, Goldman Sachs right now, if you look at the daily chart, I mean, it's had an incredible move. Obviously, like all of the financials have, really, for most of 2012, the latter part of 2012 into 2013. But right now, Goldman is showing me a nice little bearish signal right now. So I think this stock is susceptible, not a lot of downside, but I think it's susceptible down to the 140, 138 level.
Okay. All right, 50-period moving average at 141.
Yeah, actually a little bit lower than that 50 daily MA, but right around just a little bit lower, and then the stock will find some short-term support.
Okay, Morgan Stanley, MS.
Same exact pattern that is on Goldman Sachs is on Morgan Stanley. Traders don't have to do both if they don't want to, but one or the other, they both look good. Morgan looks good down to the 2060. You're going to notice there's a real nice gap fill at 2075 that is kind of calling Morgan Stanley's name, and those gaps just love to get filled.
Yeah, they do. They do. All right. How are you writing covered calls against this? Or are you going naked short? What are you doing with these?
Yeah, I'm just going to short it outright. I'm not going to do any covered calls or looking to bring any premium in via the option market. Just straight up short, and you put a stop, just above on Morgan Stanley, right above the $24 level on close.
Okay, how come J.P. Morgan isn't looking like the other guys?
Well, J.P. Morgan is the real Bank of America, and that's really what it comes down to. The stock is still a horse. It looks like it could potentially get up to that $50 level. It's still holding up very, very well. It is way overbought on the weekly and daily, on the weekly and monthly charts. But it's still holding up better, and technically you'd rather pick on what looks weaker than what looks stronger. But, JPM's susceptible to a pullback here, but I don't think it would be that big. I think it would be more towards the 45.50 to 46 level.
Okay, got it. All right, before we go, give everybody a way to get into that room with you.
Yeah, come on over to InTheMoneyStocks.com. You can take a 7-day free trial to our chat room. You'll see everything that we're doing in there. You'll also get to view our desktops. And then if you work a full-time job, come over to our research center. You get all of our cycle work and all of our nightly stock setups. I think this month alone we've put out 18 trades. We had 14 winners, 3 small losers, and 1 is in the money.
See, that's what makes me so proud. Thanks, Nick.
Thank you, Michael. Have a great day.
All right, you too. Everybody, Nick Santiago, President, CEO, InTheMoneyStocks.com. Definitely well worth the time spent in those rooms with him. Get the trade-off right. All right, coming up next,